Hello, welcome to the Zurich Zone. I'm Adam Sadiq. We have Geoffrey Au, Zurich's Chief Executive Officer for life insurance in Hong Kong, and Bernhard Kotanko, Senior Partner with McKinsey Company and the firm's practice lead for insurance. Today we're going to be talking about the GBA, the Greater Bay Area of China. What is it and why does it matter? The construct of the GBA is a significant economic growth and development aspiration and initiative for China, and for that reason is a significant commercial and strategic opportunity for businesses operating in the region. Gentlemen, thank you both for joining us today.
Thank you. Wonderful.
Geoffrey, maybe I'll start with you first. You're obviously a Hong Kong boy, born and bred, grew up in the 80s and 90s, so you're a child of the Greater Bay Area. Tell us a little bit about, I guess, the changes you've seen and I guess the opportunity that is very evident as we sit here today.
So I think the Greater Bay Area is actually very similar in terms of development of the whole China. I think over the last few decades, there's been a very rapid growth, both in terms of economic, population, technology, etc. And so GBA actually is, you can say it's one of the beneficiaries of China's push towards internationalization, as well as kind of the take advantage of the globalization trend. I think there is a lot of historical analogies as well between Greater Bay Area and what we call the Pearl River Delta, as it was called many centuries ago. And so I think, given its location, given its proximity to the trading routes, it's a very advantageous position to be in.
Interesting. And I'm keen to explore some of that historical analogy because I think that's fascinating. Bernhard, maybe from your perspective, you've got a slightly different angle, obviously European heritage. So I think you're looking at it from a slightly different perspective. But having said that, you've spent most, if not, all the greater chunk of your career in the region, Hong Kong in particular. Just interested, and obviously in your role dealing with a whole array of different companies and firms. What's your perspective, I guess, on this thing we call the Greater Bay Area?
Yeah, thank you. And I would like to pick up where Geoffrey talked about history, because I think it is very important to understand China is a country with very long-term trend lines. And the Pearl River Delta has always been the economic powerhouse. And I think it is not a coincidence that when Deng Xiaoping did his famous tour to the south, which kind of illustrated the opening of China again, he chose that part. And Shenzhen, of course, was the first free trade zone. And as a personal anecdote, I was first time in Shenzhen in 1996. And actually we crossed the border back then still to the British colony, Hong Kong, on foot. And they were the first high-rise buildings emerging. And just that shows the dynamic it is, together, of course, with the Yangtze River Delta, which is the other big boom region in China. It is the engine of the wealth boom and the economic creation that we've seen in China over the last 30, 40 years.
So let's maybe just take a step back and kind of level set, just for context, just for everyone that may not be entirely familiar with, I guess, what it is we're talking about, just in terms of definition, and if you want to put a line around the Greater Bay Area, what exactly is it? What does it encompass? Bernhard, did you want to have a crack at that?
Sure. Typical consultant always comes with some data. So it comprises 11 cities or municipalities, including Hong Kong and Macau. It's by and large the Guangdong province plus Hong Kong and Macau. It is a total of 86 million people roughly, about 56,000 square kilometers. It has about 11 cities, I mentioned this. It is about 11% of China's GDP at a higher growth rate. We see, of course, in 2023, there's a lot of discussion about the Chinese economy. Actually, GBA has been more resilient, and we'll certainly talk about this later because of its diverse and better diversified economy. And so to give you a feel, that's roughly the economy of Canada. And it's been the engine for the past decades. And it's not just Silicon Valley, it is much, much more, as we'll see.
We should definitely talk about that. Geoffrey, I guess, to what extent living, working, growing up in Hong Kong, I guess to what extent is the is there a concrete perception or tangible perception of the Greater Bay Area?
I think from a day-to-day perspective, the citizens actually travel between Hong Kong and Shenzhen quite a lot. But I think in terms of Greater Bay Area as a construct, it's been really the last few years where there's a strong push. As Bernhard mentioned, it is an important imperative from the Chinese government perspective. I think it was accorded the status of key strategic planning, which means that it is important, and there is oversight of the Politburo as well from the Chinese Communist Party. Just to fill in some of the other GBA facts. So geographically, it's in the southern tip of China, and the Chinese government actually has rather prescriptive guidance in terms of the role that each city plays. Right, so Hong Kong is the international financial center. Macau is more for leisure and culture. Shenzhen is for high tech, which is where the likes of Ping An and Tencent are. Right, so it is an area in which altogether there is a cluster of this metropolitan
urban centers.
Centers where together there should be synergies, and there should be more flow of services, people, talent, which then should help GBA as one of the role models for China to then take its next step forward, which is more in terms of high quality growth, whether it's in terms of the servicing industry. So, for example, GBA has one of the highest share of the tertiary industry in China. Whether it's even in terms of manufacturing, where they want to push towards a higher tech in terms of robotics, etc., in terms of manufacturing. So it is actually a very good proof point or test case for the rest of China.
Yeah. So Bernhard, I guess to Geoffrey's point, it sort of seems that I guess the overall sort of policy objective or imperative is sort of a thought around kind of the whole being greater than the sum of the parts, I guess, from an overall development, economic growth perspective. Do you agree with that? And I guess how does that kind of play out and come together?
Yeah, fully agreed. I think it's almost by the playbook on how a diversified economy that is benefiting from a lot of regulatory support or political support, as Geoffrey called it out, can really unleash the full potential of society. And these connections are important. I mean, before COVID, every day, 320,000 people crossed the border from Shenzhen to Hong Kong. And of course, similar numbers also in the other direction. There are millions of people connecting between those cities. And it is that proximity of the high tech in Shenzhen, the manufacturing in Guangzhou or Dongguan, the agriculture part we shouldn't forget, then of course financing in Hong Kong, that really creates that ecosystem that is quite unique.
I guess within the GBA, what that looks like, and then how does that kind of play out when we think about the GBA versus broader mainland China?
Yeah, so I think there are several aspects of that. I think technology obviously is key. I think a lot of countries, given the current political environment, wants to focus on self-sufficiency. So, for example, in terms of innovation, research, development, technology, there is a strong encouragement between the likes of Shenzhen and Hong Kong and others within the GBA, within the Greater Bay Area, to encourage the flow of talent, even the flow of data, flow of infrastructure, sharing the use of infrastructure, facilities, etc. So that, again, back to your point, the sum is greater than the parts being separate.
And but I guess in terms of the evolution of the GBA, has it been sort of your experience that it's been reasonably linear from a sort of economic and industry composition perspective? I guess we earlier talked about the history and it being obviously agriculturally one of China's most fertile areas. Manufacturing sort of seemed to come next in sort of that general sort of investment-led growth model. Has it kind of been a progression in that way? And I guess where do you sort of see the order?
It's a great question, Adam, and I would say the question if it's a more linear function or a very volatile, bumpy road is depending on what time axis you look at this. In the grand scheme of things, it's actually been a relatively clear, consistent development. But of course, when you look at shorter term periods, and I take not just COVID, but also the SARS crisis, we shouldn't forget that, where, of course, the connection between Hong Kong and the mainland, it is one country, two systems. It is a special administrative region, but there are some borderlines. We should also not forget that all these 11 municipalities have their own agenda. They have their own leadership, their own regulation. And while there is a very clear political alignment on the general direction, I think on the how, it still is complex to organize how to really integrate the regulation, how to create the standards that then work across. So in that sense, I would say it's long-term. Definitely all the research we have done ourselves and also from other sources, very positive. Short-term, it has had challenges, and I think there's going to be continuous challenges, but I think that's part of a good business to overcome that. And, the regulators have shown that they have a will to connect it more with the various initiatives. Yeah.
So just to add to Bernhard's point, right? I think overall the trend is positive, right? So the trend is improving the integration within the Greater Bay Area. As Bernhard mentioned, there are challenges just because it's one country, two systems, actually three currencies, three legal systems as well. So actually it is not easy to align, but I think therein lies the diversity of the region. And we all know that diversity has very much its own benefits. It may take longer time to align, but I think ultimately it would bring to a better outcome. So I think across industries, whether it's financial services or manufacturing, etc., everyone wants the development or the alignment to be quicker. But there are, of course, challenges in terms of how it needs to be done. But again, I think if you take a very long-term view, it would only be positive. I think maybe the analogy I have there is if we take pre-COVID, right? Pre-COVID, maybe it's a better example without the noises. If we're now in 2018, and if you ask any company, any global company, that if you were 10 years ago, so 2008, or even 20 years ago, 1998, would you have invested in China more? I would say most, if not all companies would have said yes. Right, just because of the sheer size of the Chinese economy. And again, if you take a very long-term view, if you're looking at thousands of years, the Chinese economy, for the most part, is the largest, if not, it's the largest economy in the world as well, right? Just because of the population. Even though GDP per capita may not be the highest, but the size of the country makes it a very large economy. It's very hard to ignore.
The ease of travel I've been living in Hong Kong 8 years. The ease of going to Guangzhou, the ease of crossing the border, no matter whether you are a Chinese citizen, you have a Hong Kong ID card, or you have an international passport. It's so easy, it's efficient, it's fast. And I think that signal also that the different parts of Greater China came together and built that infrastructure, built that train lanes, is a very strong signal. And I think it's an important enabler that also almost is a precursor to more of the alignment that Geoffrey said that is needed still between the legal systems and the regulators.
Yeah, you'd see that very practically, Geoffrey, in your everyday life, I guess, right?
Yeah. So one of the post-COVID phenomena that caught people by surprise, even the Hong Kong government by surprise, is that there are a lot of Hong Kong locals that actually go up to the mainland to spend their weekends. A very high amount of people actually goes up there to spend, just because of maybe the cost is cheaper and relative to the quality of what they get. So much so that the Hong Kong government now needs to be in a more, let's say, defensive or offensive mood, depending how you see it, where they now come up with policy initiatives to try to attract people either from outside Hong Kong or attract Hong Kong locals to spend locally, to stay locally to spend, right? So it is quite and just because of it's so easy and so convenient to travel up north.
So I just thought we've talked about the relative compositions of the different areas and how each of them sort of focus in on specific parts and industry segments. I'd like to explore financial services in particular. Obviously, Hong Kong being a bit of a hub for that as part of the broader GBA. We're all working in financial services, insurance in particular. It'd be good to get your thoughts, I guess, on how that's evolving, how sort of far down the track we are. I'm aware of, the Wealth Connect initiative, which, correct me if I'm wrong, is reasonably embryonic, but sort of indicative, I guess, of where things are heading. Geoffrey, any thoughts on that?
Yeah, so as you said rightly, it's in a very early stage of development. The Chinese government, together with the Hong Kong government, is actually using some early test cases. So, for example, you cannot directly market in China. The funds or the financial products that are available for the Wealth Management Connect is low-risk products. So, for example, fixed income focus, etc. And they want to wait until the things are proven before they want to scale and expand it, which I think is always the safe way to do. I think the challenge, of course, is the different regulatory frameworks, as we mentioned. The different currency also potentially pose a challenge. Is there a way to create some sort of closed loop, similar to the Stock Connect and Bond Connect, which has been so successful? That's more than just the Greater Bay Area. That's between what we call northbound, southbound, between the whole of China and Hong Kong. And so there is some analysis and research being undertaken how we can possibly do that.
Yeah. And Geoffrey, I would add that for me, the most important part is the financial system is the critical enabler to finance all that development. And when we look at Hong Kong is still one of the preeminent global financial centers, the Hong Kong Stock Exchange, and especially it is still a hub for more or less all stakeholders around the world. It's the place where we see IPOs from Chinese companies, we see listings we see investors from all around the world playing there. We of course have the onshore, offshore RMB trading. So all that is in Hong Kong. And in that sense, that is the critical enabler. So I would say sometimes there is concern, is Wealth Connect or Insure Connect fast enough and should it be more? I think we should not forget that the most important role Hong Kong plays in all of this is it is the accepted financial center. And it is much more so than Shanghai, because Shanghai is a Chinese financial center. Mm-hmm. But Hong Kong is a global financial center to connect China and the world.
Yes.
Shanghai, I think, just to add to that point, I think Shanghai tried to create its own different zone, which has a different system that has not been as successful as initially expected. So I think the role of Hong Kong now becomes more prominent in terms of being either a gateway into China and a gateway for China to go international as well.
Yeah. Geoffrey, you mentioned the Equities Connect. Was that the first cab off the rank, sort of followed by the Wealth Management Connect? And I guess was that again a kind of deliberate policy initiative, or was it kind of a bit sort of following where the funds were going and where the market was moving first, or a bit of both?
So the Stock Connect and Bond Connect has been there for quite a number of years. Yep. It's quite independent from the Greater Bay Area initiative. And I think one of it is to facilitate a better price discovery for certain Chinese companies so that it could be dual listed also in Hong Kong as well as in the stock exchanges in mainland China. Yeah, so I think the purpose is a little bit different, but there are lessons to be learned. There are references to be taken. What Wealth Management Connect and Stock Connect are trying to do, there are some references that the Hong Kong government and the Chinese government can take from the Stock Connect and Bond Connect.
Yeah, okay. And is the market driver of the participants, Bernhard, is it principally a kind of diversification play mindset, or is it a bit more?
I guess it depends on who we call the player.
Yeah.
I think there is a big financing need, of course, and Hong Kong is a place for financing. Then, secondly, it's a place where investors feel safe also under the rule of law in Hong Kong, under the stability of the financial authorities, the quality of the Hong Kong Stock Exchange to invest in Hong Kong. So I think there is really, it's both the financing part, it's the investing part, and thirdly, it's a very reliable trading part. And you have an ecosystem where you have all the professionals. You have the lawyers, you have the actuaries, you have the brokers, you have the insurance companies. Everybody is there. And I think this is very, very powerful. And with the as Geoffrey, you said, each city in GBA playing a distinctive role, I think this is actually a great opportunity for Hong Kong to be the financial center for this and for all of China's connection to the outside world.
Yeah. Geoffrey, you mentioned Insurance Connect. Tell me a bit about that. What is it? What's the sort of time horizon? What are you expecting, I guess, out of that?
Yeah. So the ultimate objective of Insurance Connect is quite similar to Wealth Management Connect, and that's aligned with the primary objective of the Greater Bay Area, which is better, further, deeper integration within the region. Now, Insurance Connect is even further behind than Wealth Management Connect. I think the Wealth Management Connect now has an earlier role to play within the GBA or the Greater Bay Area integration. Insurance Connect right now, we are focusing our discussions on setting up service centers, post-sales service centers in terms of handling claims, handling renewal premiums for policies that are being sold to mainland Chinese visitors. But as we mentioned, it's a long-term game. Right now, there are ongoing discussions between the various authorities to agree on the structure, on how it's built, on the fee model, etc. going forward.
Yeah.
And I would say, Geoffrey, I find it fascinating that almost the biggest Insure Connect that is already happening is that half of Hong Kong's insurance market is essentially with mainland Chinese visitors. And you saw this during COVID, that market completely dried up. And now, of course, in 2023, when we look at the numbers for those insurance companies active in that business, it's been booming again. And I think that's a very important signal also from regulators that they actually allow that to happen. And I think this is where it just shows that especially insurance is also seen as an important path of diversification, not just diversification within the GBA or between mainland China and Hong Kong, but also with the world. We actually are quite bullish that China recognizes very well that global diversification is good for risks. So therefore, insurance is the logical industry to invite, as we have seen, international players into the country and allow them to flourish.
Yeah, absolutely. And is Insurance Connect thinking about both savings products and protection products? And I guess, do you think they're going to both move at a similar pace?
I think similar to the lessons from Wealth Management Connect, if they were to allow cross-border sales, which the expectation is that they eventually will, they would start with the lower risk products first. So it will be a pure protection product without cash value. And then once everything is smooth and well-oiled, then they would expand it to more product categories. I don't know if Bernhard, if you agree with that.
I agree. I mean, it's quite smart actually and very practical when we look at the two product lines that are the most advanced is motor and health. Now, motor is obvious because we talked about all the mobility between Hong Kong and within the GBA. So what you want is a motor insurance policy that is consistent and protects claims across the region. So very logical to start there. And that, of course, also needs the service centers and then needs the right repair approaches and claims approaches. Then health, very similar. We have quite a diverse health infrastructure across GBA. And by allowing the financing of healthcare to be more consistent, it actually helps overall to finance and professionalize the healthcare system. And that can be southbound with mainlanders using healthcare infrastructure in Hong Kong, which is currently done a lot. Mainlanders buy a lot of Hong Kong health insurance policies or critical illness policies, but also the other way around. So I think it's quite practical. You may wonder why the regulators are pushing one or the other. But when you look at it, it is actually very practical for the economic and social integration of GBA.
Maybe to elaborate on this point, right? So in terms of motor policies, before there is this integration, if you drive your car up north from Hong Kong into mainland China, you need to buy a motor policy for Hong Kong, and you need to buy a separate policy from a mainland Chinese insurer to cover China, simply because it's different jurisdiction. Right, we talked about one country, two system. This is exactly it. Now there is a way for certain companies, Zurich included, that we now offer one policy that covers both jurisdiction. In terms of health, it is interesting that also, not just in terms of the insurance space, but the healthcare space, certain hospitals now set up shop up in mainland as well. Right, so I think it's back to the northbound, southbound flow of services, flow of people.
It's interesting when I discuss this with insurers. In Hong Kong, it's a little bit, it's the opportunity, but also the fear. Because, of course, any form of GBA integration will be allowing a form of mutual opportunity. And, of course, there is a concern that several mainland insurers have already got licenses in Hong Kong and may well do exactly what they're supposed to do in an integrated GBA, set shop in Hong Kong and try to serve customers in Hong Kong. Which, of course, for the Hong Kong incumbents is a mixed bag. And therefore, I think it's very important to, when looking at this, of course, there is a tremendous opportunity macroeconomically and socially. From a micro perspective, the individual players are sometimes quite torn. They would never say this officially, but it's very logical that you also get, of course, a different level of competition.
That's a very good point. I mean, if you look at the size of these Chinese insurers, they are huge. Right, and then the ecosystem that they've done is something that local Hong Kong insurers, it's very hard to replicate. Although some companies did already set up shop in Hong Kong, but there's likes of Ping An who has not set up shop on the life space, and the ecosystem, for example, on retirement, where they have professional retirement homes. These are high-end retirement homes with on-site nutritionists, on-site personal trainers, and then they have retirement homes in different cities. So even as a so-called as an elderly, if you want to travel across the country, there would also be retirement homes where there would be on-site nurses, on-site medical support, medication, all you need, with a private room, if you so wish. So that ecosystem piece, again, with the size of the economy, makes it so much easier to achieve because of the size than if you're just looking at the 7.5 million population in Hong Kong.
Yeah. It's an interesting example you use, and Bernhard, you talked about sort of healthcare and some of the preferences there. It made me think about, I guess, if we just think about the consumer and customer expectations in the GBA, how can we think about that as a kind of homogenous piece, and sort of how different does that look to, say, mainland China?
So I think it's important to recognize that even within GBA, when we look at income levels, these are very different. So average GDP per capita in Hong Kong is about twice of the average of GBA. So there is material differences between those cities, and then, of course, also within those cities between sectors. So I would say, as a business trying to capture the opportunities in the Greater Bay Area, it is very important to be quite nimble, and to understand the segments within. There is a different set if you're more in the corporate space and look at business to business partnerships. There, what we do see is that, as Geoffrey, you said, different cities have different clear anchor industries to pursue, and that's important to understand, to be in the right place with your right business, and then just integrate in that ecosystem. But there, I think, it's most of Fortune 500 have some form of foothold in GBA, and on a corporate side, it's just a must to be present in that play if you want to be part of China.
I think in addition to income levels, you would notice some difference in consumer behavior as well. I think Hong Kong benefited from some of the Western developments in terms of, for example, credit cards, etc. But as we know, the use of digital tools, the use of your mobile phone to do everything in your life, payments, reservations, etc., is very widespread in mainland China, much more than in Hong Kong. So the digital literacy piece is very different between Hong Kong and the rest of Greater Bay Area. And related to that, the use of data, the openness to share your data is also very different. in China, it's quite well accepted that your data will be shared, and it's okay to share data as long as there is some sort of benefit in return. Yeah, in Hong Kong, I think now it's more in between the attitude from Western economies where there is some reservation versus now they are also increasingly open. So there's still that nuance.
It's a great point. It's actually a very important opportunity for Hong Kong to catch up, because it is, it is still lagging on some of the digital adoption. We all realize this when we sit in a Hong Kong taxi sometimes.
Yeah.
Yes.
Well,
very good point.
To that point about digital, an interesting analogy was put to me in terms of that consumer preference and I guess, how they are interacting, particularly if we're thinking about it from a distribution, marketing, sales perspective, that simplistically put, if you're marketing in particular generations in Hong Kong, you're still kind of in English and WhatsApp. But, on the mainland, it's obviously sort of Mandarin and WeChat. Do you agree with that? Is that a sort of a fair sort of construct in terms of some of the differences we're seeing? Or a straw man, I guess?
I think that's fair, even though there is, again, better integration. So now I also use WeChat. I probably didn't use WeChat a few years ago. But, I have quite a lot of friends that are increasingly on WeChat, and also because of the flow of people, then I have more and more mainland Chinese friends, and that's why I would also install WeChat. And personally, it's also very good for me to experience the WeChat ecosystem, right? So one of the very powerful ways in which WeChat can engage with companies and also individuals is the concept of mini programs. Essentially, it's similar to a mini app, but you don't need to officially install the app on your phone. It's part of WeChat. And so because of that, because of the mini programs, companies can then engage their customers in a much more meaningful way than just a browser-based interaction.
Yeah. I think it's great actually to see in Hong Kong. Hong Kong has been constantly evolving, and it's very interesting now to see that those, at least in business, that have a bit of a broader interest, they use both. Just as you say, they use WeChat and WhatsApp. They understand some of Western social media, some of Western dynamics, but they also understand what is happening in the mainland. Ideally, they speak Mandarin, Cantonese, and English. So I think there is a good opportunity. It's going to be important for Hong Kong to see the and not the or.
Yes. And to that point, I mean, maybe just rounding out, I guess from a product perspective, I think you talked about some of the consumer perceptions sort of in the health space, and they're coming to Hong Kong based on, I guess, perceptions of product array and quality and so forth. How entrenched are those perceptions in those and other areas, and how plastic are they, I guess?
That's a tricky question. I think maybe Geoffrey knows it as one of the competitors in the industry. But of course, Hong Kong is home to some very iconic insurance brands across sectors. And I think there is an interest from, and we see this with the mainland Chinese visitors, they believe that those products sold in Hong Kong offer them a better deal, better quality. Part of that is perception. Probably part of that is reality when we look at some of the underwriting, some of the pricing. Is it ingrained? I would say when I learned one thing, having lived now in Asia for 10 years overall, nothing is ingrained. It's a constant flow, and therefore we'll see that change also evolving.
Yeah. I think the involvement piece is very spot on. I think especially for Chinese customers, they're a lot more flexible, not only compared to Hong Kong, but compared to the rest of the world. I mean, they are very open to new ideas, to new experiments. And so in terms of quality of healthcare, I think because Hong Kong has started its healthcare development so much earlier than the rest of China, I think there are a lot of practices, not just tools, because if it's just tools, then you can buy it, and the Chinese hospitals can buy it, but also in terms of best practices, how you manage your patient throughout the cycle. I think all those, I would argue, Hong Kong is still ahead. And so there is the attraction of the Hong Kong medical system and ecosystem, which then leads to the demand for medical insurance policies and critical illness policies in Hong Kong. Being one country, two systems, I think the allowed medication is also different between China and Hong Kong. Hong Kong can potentially allow certain drugs that are more experimental that may not be allowed in China. And so there is that consideration as well.
Yeah, interesting. Maybe just to finish up, I kind of wanted to return to, I think, the historical analogy we started with, in that once upon a time, the Greater Bay Area was called the Pearl River Delta. Geoffrey, I think you touched on the fact that it was strategically really important, very safe, shallow water, lots of islands, but it also enabled a huge amount of trade because of being such a fertile agricultural region. And it seems what we're witnessing, and by virtue of that, was a kind of key stop in the ancient Silk Road. In thinking about this, it really struck me that in the 21st century, we're now talking about the Greater Bay Area, which is the corollary of the Pearl River Delta. But we also have the Belt and Road Initiative, which in many ways, I think the aspiration of which is kind of the new Silk Road in some respects. Is that, so is history rhyming here? I mean, is that kind of where we're heading if the GBA opportunity develops into where we think it will logically? And I guess as a follow, like, how critical is and complementary is the BRI to the overall agenda, I guess?
Yeah. So I think people would always know this, but sometimes they may not fully appreciate the fact that China is both a country and also a civilization. And because it is a civilization, in terms of the thinking, in terms of the culture, is very much affected by its history. Yeah, and so I think you very aptly made the analogy between Belt Road Initiative and Silk Road, and we also talked about Greater Bay Area with the Pearl River Delta. I think if you look at specifically about these two initiatives, it is, if we take one level higher, it is very much aligned with the dual circulation strategy by the Chinese government. Now, dual circulation includes basically two different circulations. One is internal, and the objective there is to encourage internal consumption, because the Chinese government realizes that if you look at any other of the Western economies, it's more consumption-driven rather than investment-driven. And investment-driven gets you up to a certain point. But to then get to the next point, sometimes it's referred to the middle income trap. You need to then go for high quality growth, right? So the internal circulation is for that purpose, to encourage internal consumption. Then you have the external circulation. Then that goes, one of the key initiatives is Belt Road Initiative. How do you link up both in terms of economic flow and also to that extent, potential people flow, political flow, etc. So the dual circulation strategy is also a key imperative for China, not only for its economy, but it's also set as a powerhouse.
I love that. I love that we talk about the Belt and Road Initiative as well, because I think it is very important that it was, when I take the glass half full view, it was a wonderful intent of rebuilding that old Silk Road mentality, which was, of course, a huge catalyst and engine for globalization hundreds of years ago. And in the ideal world, of course, GBA would be part of that, because the Belt and Road Initiative has one that is the connection by sea, and there that GBA plays an important role. Now, realistically, of course, we need to acknowledge that BRI is hugely complex, because it covers different countries, different cultures, different civilizations. And of course, what we've seen in the past few years is, unfortunately, if I may say, rather a loss of trust and a loss of shared spirit rather than a gain. Our McKinsey Global Research Institute has been very vocal and clear that globalization is good in the end for the global civilization. And therefore, we strongly advocate, based on all our research we see, all our work we do, that initiatives like this, of course, they need to be win-win. They need to be pursued, and they will help us create a better planet. It will be super complex. It will be hard, but I think it's important to see the positive in it, and also to call out when individuals try to optimize for themselves, but in the end try to create, in best game theory, a win-win model.
Fantastic. I think that's a very appropriate place to leave the conversation. I think it's obviously a fascinating region, a fascinating time, and I think if we had this same conversation in 3 months, 6 months, 12 months, it'll probably be markedly different. So, let alone 10 years. So, gentlemen, thank you both. Bernhard Kotanko, from Senior Partner with McKinsey Company. Geoffrey Au, Chief Executive Officer for Life Insurance in Zurich. Thank you both.
Thank you. Thank you.